Hello, I'm Ali, and in this lesson we'll talk about tracing and vouching. The auditor frequently uses tracing and vouching during the course of an audit. Tracing and vouching both involve the auditor examining documents. However, these two are different when it comes to the direction of testing. With tracing, the auditor starts with the original source documents and follow them forward to see what they are actually recorded in the form of a journal entry in the accounting books. What is a source document? A source document is an original record which contains the details that support or substantiate a transaction that will be or has been entered in the accounting system. For example, sales invoice is used as a source document for recording a sale on account. Anytime a business spends or receives money, a source document is created. This procedure is performed to ensure that the accounting records are complete, or when there is a risk of an understatement of transactions or items in the financial statements. Likewise, the auditor usually performs the tracing procedures when they need to test for completeness assertion. So via tracing, the auditor can verify whether transactions or balances that should have been recorded have actually been recorded. Therefore, the auditor may detect any misstatement that could occur during due to the omission of transactions from the financial statement. Vouching goes the opposite way of tracing in the audit. With vouching, the auditor starts a journal entry or ledger balance and works back to the original source documents. This procedure is performed to verify if the recorded transactions actually occurred. The auditor usually performs vouching when there is a risk of overstatement of transactions or items in the financial statements. Vouching tests for existence or occurrence assertions. Let's do an example. For example, if the auditor is trying to figure out was a sale recorded, so the auditor could use tracing. So the very first thing the auditor will try to find out the shipping document. So if a purchase of a product was made by a customer, then ultimately this is a physical product. It should be shipped out at the same point. The auditor traces forward to see whether is there any sales invoices that was sent out to the customer. Once the auditor finds the sale invoices, then the auditor goes forward to see is the journal entry recorded. So by this, the auditor can verify whether sales transactions that should have been recorded have actually been recorded. With vouching, the auditor will be doing the opposite action because the auditor is going to find out did a sale take place. So the auditor will be starting from the journal entry. Once the auditor finds the journal entry, that means a sale is recorded. Then the auditor will be finding out whether there was actually a sales invoice sent to the customer. Once the invoice is found, then the auditor will be going backward to see is there a shipping document? Is there any proof that something actually was shipped to the customer? If there is a shipping document, then this will provide an evidence that the sale took place. The auditor can still go back further to check for a customer purchase order to find out if there is any proof that a customer even made an order. Thank you, and in the next lesson we will talk about using the work of an expert.